The forms 433A or 433F are used by the IRS to analyze your individual financial situation for any number of reasons, usually for collections. There is another form 433 OIC, which is used in conjunction with submitting an offer in compromise, but the same basic information is revealed by you no matter how it is to be used. Each of these forms is slightly different in appearance, but the same essential information is being requested by the IRS from you. The various forms 433B are used by the IRS to analyze your business financial situation. The sum of this information is then carried over onto the form 433A when considering your personal finances. So, the IRS uses these forms to see how much they can collect from you. You must construct your evidence along with the form 433A in order to make your case with the IRS. Your best chance of success is to construct the forms and the evidence as thoroughly as possible. Here are the various forms 433 from the IRS. Download and print the one which you need to complete. Fill it out in pencil while you are watching the following webinar. Publication 1854 supposedly contains instructions for completing the form 433A, but it is only of use to you in predicting how the IRS will review your file. It is your duty to prepare that file and make your case with the IRS because they will not and cannot help you. Therefore, the method and manner of completing the IRS forms and presenting your evidence is critical to obtaining your desired outcome. Read Publication 1854 for some guidance, but use the following instructions for more specific advice regarding each line of the Form 433A. The first page of the Form 433A appears like the example on your screen. The information requested in Section 1 of the Form 433A is mostly self-explanatory. Your names should be as they appear on the last return you filed. If any information is different, use Form 8822 to correct the IRS records. The IRS usually wants the address for your personal residence, but P.O. boxes are not disallowed either. The IRS may use any telephone number you provide them to call you, but because the IRS always confirms their determinations in writing, and your responses to them will usually be in writing, correspondence is the preferred method for making your case. You should feel free to call them for information, but make all requests and confirmations verified in writing. Your marital status will usually be the same as on your last filed return. If it has changed, obtain a copy of your divorce decree in case the IRS wants to see it. The dependents you list here should be as they appear on your last filed return. If you are caring for an aging parent or a relative's child, you can list them here, but the IRS may not give you credit. In boxes 3A through 3C, the IRS is asking for interests you may have in LLCs, LLPs, corporations, or any other sort of business. They want to know what your cash flow is and what assets you own. A business interest is such an asset. While it is unlikely that they will seize assets of the business, they will at least know what the business is worth, how much you can earn from the business, and if there are any assets or accounts receivable which can be used as collateral for loans. In the end, they may ask for a Form 433B or that you complete pages 5 through 6 of the 433A for self-employed persons. Here, the IRS requests your Social Security numbers and dates of birth, which are used to verify your identity. Here, place your employer's main office information and address. You may place your work number on the form, but it may be irrelevant if the box is checked No, disallowing contact at work. You may reveal your length of employment, and it should not have any effect on your case. Listing your occupation is informational. The IRS will object if they believe the number of exemptions you claim on your W-4 is excessive and possibly demand your employer withhold at single zero the highest amount. Your pay period will be evident from the pay stubs you will be required to reveal to the IRS. The IRS asks for information concerning lawsuits you are pursuing because they are looking for an avenue of collection. But you can also show them that you were damaged and justify abatement of penalties. List your bankruptcies here and show the IRS collectors that you have endured a hardship case. For question number 8, the IRS is asking if you lived abroad for more than 6 months within the last 10 years. This might possibly be to judge if you are a flight risk and if they should make jeopardy assessments against you, or to possibly investigate if you have substantial foreign bank accounts, or to determine if they have extra time to audit you, or to serve you with a U.S. District Court case. But in any event, this question appears little related to the collection of back taxes. The IRS wants to know if you are a beneficiary of any trust, estate, or life insurance because they will levy against it or request that you give them the proceeds. It may be better to obtain a loan against any equity. Here, the IRS wants to know about safe deposit boxes you may have, and once again with emphasis on any foreign deposits that may exist. If you transferred any assets within the last 10 years, especially to family or friends, the IRS wants to know with question 11 so they can evaluate whether they could possibly erase the transfer by proving it was a fraudulent transfer. But the obvious question is, what was the fair market value at the time of the transfer? The amount of cash you will have on hand will vary from day to day, but list the average amount you have kept over the last month. You may have to use separate explanations if the number of bank accounts you have is greater than 2. You may also have joint accounts with somebody else. The IRS will request that you send them copies of the last 3 months' bank statements from all of your accounts. You can show them that any joint accounts are for convenience only and should not count as a collection option. List the balances of each account as they will exist after you've paid all your bills. The IRS will want to know about investment accounts and deferred accounts such as pensions, IRAs, and 401ks because they will ask you to liquidate them or obtain a loan using the balance as collateral. For deferred compensation accounts, you need to obtain a copy of the withdrawal or distribution policy of the company holding the funds to show that you were not able to withdraw or secure loans against the balance. Here, the IRS wants to know about virtual currency, which they call digital assets, and they want the virtual currency's public key if you have it. These extremely volatile assets may be difficult to evaluate, but if you have Bitcoin, Ethereum, Litecoin, Ripple, or even FTX, the IRS will want the last 3 months of statements. Here, the IRS requests information concerning credit you may have. If it is significant, they will ask you to get a loan to pay off the taxes, and they resist giving you credit for the expense to offset current income, which allows them to collect more against you. So, only list real credit you can obtain now, not on any contingency. The IRS only wants to know about life insurance which has cash value, because they will ask you to withdraw your equity or they will take it. Contact your agent or the company and determine what limitations exist on withdrawals or loans so you'll be prepared. The entries in this section are self-explanatory. This section is devoted to real estate you own or rent, not for renters who do not own the property. The most important box is where you estimate the fair market value of the property. The value of any property is difficult to determine, but it would be decreased by transaction costs and fees. To arrive at fair market value, determine what would be the fire sale value of the property, and subtract the estimated real estate fees and closing costs. If there is equity in the property, the IRS will request that you obtain a loan, but remember the mortgage interest payments are deductible. This is where you list your automobiles. Again, as with any other asset, the fair market value is important because the IRS will ask you to sell or obtain a loan on any equity you have in the vehicle. You can use the trade-in value shown in Kelly or NADA Blue Books minus the cost of selling and transporting the vehicle. Also, when negotiating on a payment plan, the IRS will determine the final date of your loan payments and increase your required payments to them by that amount. The fair market value is the fire sale value minus the cost of transportation and transaction fees. The IRS will adjust your payment plan upwards after the date of final payment for the vehicle. If there is any equity in your vehicles, the IRS will ask you to sell them or obtain a loan against the equity. Here is where you list the value of your personal assets and household items. Again, as with real estate or vehicles, the fair market value is scrutinized by the IRS. They will ask you to sell or obtain a loan against any substantial equity. So, the fair market value is the fire sale value minus transactions and transportation cost. Section 4, lines 20 through 50 are the most important lines on the Form 433A. The IRS essentially adds up all your income on line 34 and then subtracts all of your expenses on line 49 to request that you give them the difference. But you will find that the IRS refuses to recognize your valid expenses, but instead only gives you their allowable expenses, which means the amount they request you to pay is excessive. We will discuss how to avoid this result. Calculate your monthly wages even if you are paid otherwise. Gather at least 3 of your current pay stubs to show the IRS. Interest you receive can be minimal or large, but if you don't have current statements, just use the amount you claimed on last year's return, annualized for accuracy. To arrive at this entry, you must first either complete pages 5 through 6 of this Form 433A or complete a separate Form 433B. The IRS usually wants Form 433B for rental properties, but if you own only very few, just complete pages 5 through 6 of the Form 433A and estimate the net rental income based on last year's tax return if it's accurate. You should gather the last 3 months' statements from companies making regular distributions to you. Be prepared to explain to the IRS if you had a one-time distribution which appears on last year's return. Gather the last 3 months' statements showing pension or Social Security payments to you. Be prepared to explain to the IRS if you had a one-time distribution on your last year's tax return. Child support and alimony are considered together here because neither is dischargeable for the payer in bankruptcy. But child support is not taxable and alimony is taxable. You can get the support order to prove what you receive, or you can prove it by relation to bank statement deposits or records from child support enforcement agencies of the government. But only include the amounts you actually receive, not what you are supposed to receive. Place all other sources of income here and be prepared with statements to show the amounts. Only report what you actually receive. Here, place the net total from all your income sources. There are two columns under total living expenses. One is labeled actual monthly, which is what you actually spend, and the other is labeled allowable expenses, which is what the IRS allows. So the evidence you will be gathering is your actual expenses, but you must research and understand what amounts the IRS allows for various items. The IRS has a web page devoted to national standards, food, clothing, and other items, which explains how much they will allow in expenses to offset your income. Essentially, they have taken the demographic statistics from the Bureau of Labor and other government agencies concerning the cost across the country for living expenses. Unless you have proof otherwise, they will only allow the average amount for the county in which you live. So be prepared to show the actual amounts you paid for these expenses with receipts, billings, and payments for the last 3 months. They also have a web page devoted to local standards, housing, and utilities, which gives a state-by-state breakdown of allowable expenses for housing and utilities, as well as a transportation standards web page with a breakdown of allowable transportation expenses by region. The IRS also has a web page devoted to collection financial standards, which is helpful to predict their analysis of your case. Don't worry if you don't have all the evidence immediately. You can go get whatever the IRS wants. This amount will vary according to the number of taxpayers and dependents shown on page 1 of the Form 433A. Because this is such a broad category, you must copy and prove all expenses you pay towards running your household. Look at your check register to determine on what you spend your money. Separate all expenses according to food, clothing, and miscellaneous, which is a very broad item. Copy all billings for these expenses and proof of the payments you made, whether the proof be credit card, check, or otherwise. Gather proof of all expenses for dependents, school, church, private lessons, supplies, etc. Place them all in a folder labeled Food, Clothing, and Miscellaneous, and be prepared to give copies to the IRS. Preferably, you should gather your lease agreement or mortgage amortization schedule. Then get proof of the payments you made for the last 3 months towards housing and gather the billings and payments for these items. 1. Utilities. Here, get every type of utility for your house, including heat, electricity, gas, water, trash, lawn care, etc. You can also include cell phone costs here if they are not already included on line 33. Also, add your cable television and internet service here. 2. Insurance. Get the declarations page for the policy and proof of the billings and payments you have made for the last 3 months. 3. Maintenance, dues, fees, etc. Include here items which you don't plan on but occur infrequently, deductibles on an insurance claim, or unexpected repairs. The number of vehicles which you are allowed to include here depends on how many drivers exist in the household, listed on page 1 of the Form 433A. For children and dependents, you can probably add their vehicle costs. But for non-dependents you may be supporting, the IRS will likely decline to accept the expense. For line 35, gather the last 3 months' billings and payments for auto lease or purchases. Remember, the IRS will try and raise your payments to them when the auto payments cease. For line 36, pile on your proof of expenses for gas, oil changes, all maintenance, regular and unexpected, license, registration, and plate fees, air quality inspections, parking, and tolls. Do not leave anything out and get the receipts from all dependents. For public transportation costs, gather all payments for bus passes, taxi cabs, car, van, or truck rentals, valet, parking, and toll fees. Health insurance will appear on your pay stubs if you are an employee. Otherwise, gather your billings and payments to all health insurance providers. Include dental, vision, long-term care, major medical, accidental death and dismemberment, and specialized medical coverages for you and your dependents. Pile on your expenses for prescriptions, copays, deductibles, health savings accounts, and incidental expenses for medical equipment you rent or purchase. Be sure to include mileage to and from the medical providers at 23 cents a mile. Include here all child support, alimony, or other court-ordered payments such as credit card or real estate lawsuits or attorney fees you were ordered to pay. Get a copy of the actual court order in case the IRS wants to see it. Gather all your expenses for child and dependent care, including care for aging parents. Get the billings and payments you make to the care providers, as well as incidental expenses for extracurricular activities, school, tutoring, and enrollment fees you pay for each dependent. Life insurance may appear on your pay stub, but also gather proof of billings and payments you make for whole, universal, or term insurance which you pay separately for you, your spouse, or any dependent. Some school fees and credit card fees include a life insurance feature. Taxes will appear on your pay stub, but you may also pay separate real estate, property, use, and sales taxes to various governmental entities. Be sure to include all taxes you pay to any government, federal, state, county, or local. Here, place all other secured debts for which you are indebted: real estate, personal property, life insurance, or any collateralized loan. Include in delinquent tax debt the taxes you owe to your state or local governments. To claim the expense, you should contact those other governments and get a written agreement to pay. You can show the IRS this written agreement and claim the amount as an expense. On a separate sheet of paper, outline and tabulate every other bill you have each month. Get 3 months of billings for each item and proof of 3 months of payments for the expense. This line is the sum of lines 33 through 44. Remember that the IRS will adjust all of your numbers for their allowable expenses. But do not be deterred. Continue to gather and send them any information on any expense you have. Essentially, the IRS will take your total income from line 32 and subtract your total living expenses on line 45 to request that you pay them the difference. If you are upside down, the IRS may place you on temporarily uncollectible status, reject your installment agreement, or request more information from you. In any event, be prepared with any further evidence the IRS may require. The fourth page of the Form 433A has a guide for completing the Form 433A and signature boxes. The guide is not detailed and will give you only general guidance. After you've completed the Form 433A, sign in the box indicated at the bottom of page 4. Pages 5 through 6 of the Form 433A are for self-employed individuals. The IRS asks for a Form 433B from all other types of businesses. Here, simply indicate whether you are a self-employed taxpayer or not. All other business types use Form 433B. Place the business name and address here if there is one. These lines ask for your employer identification number, the type of business you own, and whether you are a federal contractor. You would only have an employer identification number if you have employees. Otherwise, leave this blank. Indicate the type of business you own in box 54. The only reason why they ask if you are a federal contractor is to try to cancel your contracts or seize the federal payments for you. Here, the IRS asks for your website address, the total number of employees you have, and your average monthly payroll. We consider this an optional disclosure since the only reason they ask for your website address is to investigate your lifestyle. The questions relating to the number of employees and the average gross monthly payroll are to determine if you are meeting your payroll withholding requirements. This might be important if the tax they are collecting is payroll taxes. For income taxes, this appears irrelevant. The IRS is asking for the frequency of your tax deposits to determine if you are in compliance with your FICA tax deposit requirements. The question relating to e-commerce is to determine if you have an account with the payment processor that they can seize. The IRS asks for your payment processor and account number so they can try and seize your account to enforce collection. The IRS asks for information on credit cards accepted by your business so they can determine your income stream as well as an account they can seize. Here, place the total of all petty cash or otherwise you have in hand. This amount will change day to day, so place the net amount after you've paid all your bills. List all business bank accounts and numbers here. The IRS will also require at least 3 months of bank statements for each account. If you are a fiduciary or hold some kind of trust account, do not list that here because it is not your money. Since the account balance changes frequently, place the balance as it will exist after all your bills are paid. The IRS wants to know about anyone who owes you money. They will look to the accounts receivable for payment or ask you to take a factoring loan against the receivables. If the IRS seizes these accounts, it may adversely affect your relationship with your customers. However, it would be to your advantage to give the IRS the names and addresses for those customers who owe you money and for whom no further business relationship is possible. Place the total outstanding balance on line 65F. You may need to use extra pages to list all the business assets the IRS requests. If you are purchasing the asset with payments, the IRS will adjust your installment agreement upwards when the payments cease. You may need to obtain the purchase or lease documents to determine the date of purchase lease. You are allowed to estimate the fair market value of your assets. The IRS uses the same standard as used by the bankruptcy courts, that is, the trade-in, fire sale, or garage sale value minus the costs of seizure and sale. The IRS will probably also want to see your depreciation schedule to determine your basis and the depreciation you have deducted. You may have to refer to the amortization schedule or latest statement to determine the current loan balance. The IRS will request statements or billings from you which will indicate your monthly payment. The amortization schedule will indicate the date of your final payment. The IRS will calculate when that occurs and increase your installment payments to them by that amount. If there is any equity in the asset, the IRS may request that you sell it or obtain a loan against it. In this section, you will compute your gross income and subtract your business expenses. The result is carried over to line 23 on page 4 of the Form 433A as personal income to you. Of course, the amount of income can vary greatly over any time period, so you may have to use a year's worth of information to establish a discernible pattern. But it is imperative to add in all your business deductions. The first line of Section 7 simply asks which type of accounting method you use. The accrual method is rarely used by self-employed individuals. Here, indicate to what time frame you are referring in your disclosures of income and expenses. Whatever time period you used will be annualized and divided by 12 to determine your monthly income and expenses. Refer to your bank account statements to determine the gross receipts of the business over the time period you have selected. Refer to your bank statements for all rental income. Unless there are separate bank accounts for each type of income, you may have to separate the rental deposits from the other income deposits to show the IRS the distinction. Once again, your bank statements or year-end Form 1099 INT statements will show the IRS the amount of interest the business receives. Usually it is very small. The business will only receive dividends if it owns a part of another business, which for self-employed individuals is extremely rare. Depending on the type of business you have, the amount of cash receipts could vary greatly. If you have already included cash receipts on line 67 above, it is not necessary to place them here. Other income could include royalties or prizes. Add up lines 67 through 75 to arrive at the total on line 76. If you will notice, the IRS does not have a column here for allowable expenses, such as they do on page 4 of the Form 433A. So, you are using actual figures, and it is to your advantage to compile as many business expenses as you can. Obtain all the billings and payments you make for materials and calculate the total payments on an adding machine tape. The IRS may request that you show them this proof, so keep it handy. If you sell products and incur a cost of goods sold, be prepared to demonstrate your full inventory accounting to the IRS. Here, place your inventory purchases. Place all other costs of goods sold expenses on lines 77, 79, and 81. Include here all wages, commissions, contract labor costs, and the taxes and insurance associated with these workers. Include rent for your office space, as well as machinery, vehicles, or equipment which you rent often or infrequently. Compile all your supply purchases here, including those associated with cost of goods sold. Be sure to add all electricity, gas, water, trash, janitorial, landscaping, and office care here. The amount for auto gas oil will vary according to the type of business. It is possible to simply use the standard mileage rate, but it will likely be to your advantage to go to the effort to obtain all gas oil repairs and maintenance expenses to promote a greater expense deduction. Obtain all billings and payments for repairs and maintenance and calculate the total on an adding machine tape. You likely have the check payments you made for insurance, but the IRS will probably want to verify that the insurance is business related. If so, get the insurance policies or go to your insurance agent and have them print out the declarations pages for your business policies. Here, place all federal and state estimated taxes you are paying, as well as all taxes you pay to state, county, or local governments. If your business expenses can't properly be placed in the above categories, put them here. You may have to use a separate paper to itemize them all. Add up all your business expenses and place the total here. You will subtract your total business expenses, line 88, from the total business income, line 76, and place the net business income here and on line 23, page 4 of the Form 433A. The net amount of business income from line 89 is then carried back to page 4, line 23, and from there, the total income from lines 20 through 33 is totaled on line 34, with the expenses from lines 35 through 48 subtracted out on line 49, and the net difference is placed on line 50. While you are compiling and completing this Form 433, keep in mind that the IRS assumes that line 50 is your disposable income and you can give it to them. Therefore, don't forget to add some small amounts into your expenses for entertainment, charity, and all provable expenses of your lifestyle. Don't hold anything back as long as it's legitimate. You and the IRS have that object in common. You're both seeking the truth. After you have completed the Form 433A and are prepared to face the IRS, it is worthwhile to show all your evidence and the form to the attorneys at Tax Help Law. Then you will be fully prepared to win against the IRS.